We will discuss harmonic price patterns. Let's understand the difference between harmonic price patterns and everything else. It is a normal price pattern. We discussed that there can be an even up and down. They are changeable, but we have to be subjective on that matter. But the harmonic price actual patterns, they are totally objective, from which we read pivot points. They are calculated exactly that subjectivity. There is no existence of my opinion, so harmonic patterns are calculated as they are. They are exact, there is no need for my opinion. So when a pattern matches the exact calculation, it will be valid. If it doesn't match the calculation, it will be invalid. So in this, we will show that this is an ancient topic. We will not go into too many patterns. We will discuss the basic patterns. So in the basic patterns, we have A, B, C, D. We have the CDFF pattern, Jacatry, Crab, Wrap. We will just discuss these. Then you can move on. So the ABCD pattern is a retracement pattern, right? When it completes, we get a retracement of 0.618. So in this, we have 4 points. Ribbon, A point, another B point, C point, and D point. First wave, the first move will be A and B. We should have the B to C movement, which should be equivalent to 0.618 Fibonacci retracement of A to B. Now, all these harmonic patterns are based on total Fibonacci. So in Fibonacci, we have 0.61 as the retracement of the AB. That will be BC. Then CD will be 1.272 extension of BC. These are exact calculations. So A, B, and CD should have equal length and duration. A, B, and CD should subtract BC. They should both be equal in length, and the time that it takes to complete them should also be equal. And when this is complete, we will sell from the end of the all buy, from the end of the, and what will be its target? Its target will be 0.618 retracement level of the A to D movement, of the total movement. So these are done. A BCD pattern, then you have the C dive pattern. It is just like the ABCD pattern, but it has another wave, the third wave. That is why it's called the C dive pattern. So in that, we had a collection that was like B2C. In this, we have two collections, 3 impulse waves, just like the Elliott wave, 5 wave pattern, you could say. So when this is complete, we get a retracement. The calculation we have is simple. The first wave, the second wave, and the third wave need to be equal. Just like A, B, C, D, the time it takes to complete the 3 waves should be equal. And the collective waves A and B that we have pointed out should be 0.618 retracement, Fibonacci retracement of their respective move. The next wave should be 1.6272 extension of the collective wave. For example, the first drive came, our collection was the A impulse. Then we have the second drive 2. Then we have its collection at B. Then we have the third drive 3. So as you can see, after 1, the A that is formed, the 2 will always be 1.272 extension of the A level. We will derive the 1.72 level from A, and 2 should always have that. Similarly, the collective wave of 2, the third drive should also reach the 1.72 Fibonacci level. So this is our calculation that we have to match. If the calculation does not match, then the pattern is invalid, and this will also be a 0.618 retracement profit target of the total movement. This will be your collection wave, and your sell will obviously be below the third wave. This will be above, depending if it's bullish or bearish. Then you have the Gartley pattern. The Gartley pattern is, right now we have the Gartley pattern. This is the trend continuation pattern. This was developed by H.M. Gartley. This also uses ABCD for calculation and uses an exponent to read the high score, to read the significant high rows. So this can be used to identify the end of a collection. Now, for example, a bearish wave has come. We have risen again for the collection. In the polish, we fell again.
Now, how do we identify the bad collection and the best collection? For that, we will use the garter pattern. The garter pattern is very simple. There is a very simple way to draw it. We will take X revolve. We will take for example, if the best wave has come, we will take X swing high and swing low. Then whatever door follows, that has to be 0.618 retracement of X. All right, that will become the B. Then the BC should be 0.8, 0.8 or 6 returns in of AB. Then CD is 1.7 to 1.618 extension of BC. CD is a 0.786 return of X. This pattern works when you understand how to directly use Fibonacci retracements and know how to calculate them. So this is how you do the garter pattern. Basically, you drew an X and an A pit. 0.618 of AB should be its reach. Then BC should be 3, A2 of the AB, or R6 of the AB. Then CD should be 1.618 of the BC. After that, the collection will be complete. Where will our profit target be? Our sell will be above 1x and our profit target will be below 1 because this is the trend continuation pattern if we made a row. So in its competition, the viewer expects the price will make a roar. This will also sit 1. And if it is a bullish pattern, it will exceed the previous high. So this is the gutter pattern.